Take a look at the sheer violence of this momentum, up 147% in a single week. This chart tracks an asset that launched at less than 1/10 of a cent before spiking near $4. It's called SIREN. Looking at this action, is this a valid entry point or a dangerous trap? The outward marketing pitches a tech-heavy future, but the actual on-chain data tells a different story. Right now, two distinct groups are eyeing this token: aggressive momentum traders looking for the next leg up, and cautious investors trying to determine if there is any actual value here. To see which side has the better case, we have to look past the hype and measure the token's promise against the structural facts. We'll start with the technical base. SIREN is a BEP-20 token operating on the BNB chain. It sits at the intersection of two volatile markets: artificial intelligence and meme coins. It launched in early 2025 through the Four.meme platform. That means it was a fair launch, with no pre-sale giving early advantages to insiders. That clean launch and immediate price action is seductive. But trading this token without understanding its internal mechanics risks a total loss of capital. The core product driving the momentum is an on-chain assistant known as the SirenAI agent. The agent is built with two distinct personas. The first is the golden persona, a cautious side that uses a data-driven approach to analyze the market. Then there is the crimson persona. This side is bold, aggressive, and built for high-risk plays. Think of it as a crypto trading bot wrapped in the drama of classical Greek mythology. This narrative has found an audience. The market has validated the concept with a $930 million market cap. The community traction is also high, with over 52,000 active holders. We are also seeing genuine visibility through listings on major platforms like Binance Alpha and Gate.io. This dual persona narrative captures the current interest in AI-driven crypto. It creates the kind of story that generates massive market hype. Between the AI narrative and growing holder base, there's a strong bullish argument for short-term growth. Now, look at the on-chain reality. We start with a baseline circulating supply of 727 million tokens. The first structural red flag is that there is no confirmed hard cap on that supply. An uncapped token creates a long-term inflation risk. For a buy and hold investor, that means your share of the project can be diluted indefinitely. That risk is compounded because there is no burn mechanism to reduce tokens over time. But the second red flag in the data is more urgent: severe wallet concentration. On-chain analytics show one whale cluster controls the vast majority of the float. With this control, they can artificially pump the price to create FOMO. Once the market buys in, they can execute a violent, immediate dump of liquidity to take profits. Retail investors buying the AI story are left holding the tokens when the price collapses. Despite clever AI marketing, heavily centralized mechanics make SIREN a structural risk that's dangerous to hold. Turning to the current price action, SIREN is trading around $1.28. That is a significant drop from its historical high of $3.83. The market sentiment is explosive, but extremely fragile. The underlying tokenomics mean the trend can reverse at any moment. This candlestick chart shows the critical support level that momentum traders need to watch: the $1 mark. If the price breaks below that dollar, the short-term bullish structure is likely finished. This comparison summarizes the trade-off. We have the traction of the AI narrative on one side, weighed against the mechanics of the supply on the other. For the aggressive trader, SIREN offers momentum opportunities, as long as that support level holds. But for the cautious investor, the whale risk and uncapped supply make this unviable as a long-term hold. If you decide to interact with this asset, the rule is non-negotiable. Only use capital you can afford to lose entirely. The upside of the AI narrative is loud, but the concentration risk is louder. Trade with tactical caution.